Markets pressured by hawkish Fed, dollar rallies. Global equity markets came under pressure at the start of the week as rising geopolitical tensions surrounding Ukraine coupled with the Fed policy weighed down on stocks. The selling pressure intensified after NATO said it was reinforcing Eastern Europe with more ships and fighter jets in response to Russia's military buildup at Ukraine's borders. On Tuesday, the MSCI's broadest index of Asia-Pacific shares outside Japan fell 1.2% to notch one-month lows, while Chinese stocks posted their biggest daily drop since July of last year. Wall Street stocks closed lower the same day but came off session lows ahead of the outcome of the Federal Reserve meeting. The Dow Jones shed 0.2%, the S&P 500 fell 1.2%, and the Nasdaq Composite gave up 2.3%. In individual stocks, American Express rallied nearly 9% after fourth quarter earnings surpassed estimates due to record credit card spending. Also, the company boosted forecasts for revenue and profits in 2022. Asian markets were mostly higher on Wednesday, with the MSCI's broadest index of Asia-Pacific shares outside Japan adding 0.26%, while still testing mid-December's one-year low. Japan's Nikkei 225 lost 0.44% to hover just above its lowest level since December 2020. Despite the local bounce, concerns about the Fed tightening and geopolitical uncertainty continued to unnerve investors, capping gains in the markets. In Europe, equities closed higher on Wednesday ahead of the monetary policy announcement from the Federal Reserve. The Pan-European Stock 600 ended up 1.7%, with the oil and gas stocks leading gains as oil prices rallied. Germany's DAX 30 climbed 2.2%. Geopolitical tension at the Russia-Ukraine border continued to dominate market concerns too. President Joe Biden said that he would consider imposing personal sanctions on Russian President Vladimir Putin if Russia attacked Ukraine. Overnight, U.S. stocks erased early gains after Jerome Powell signaled that the Federal Reserve will steadily remove support for the economy as it battles the elevated inflation. The central bank chief said that he backs a March liftoff and won't rule out a hike every meeting. In its statement, the central bank signaled its first rate hike in 4 years will happen soon, while saying that it expects a balance sheet reduction to start afterwards. The S&P 500 fell just 0.1%, and the Dow Jones Industrial Average shed 0.4%, while the Nasdaq rose less than 0.1% to finish nearly unchanged. After the closing bell, the pressure intensified, however, as the futures tied to the Dow declined nearly 1%, while the S&P 500 futures and Nasdaq 100 futures slipped 1.12% and 1.36% respectively. Elsewhere, the safe haven dollar stays elevated after a rally seen on Monday amid widespread risk aversion. The greenback received a boost from the Fed after the central bank concluded its two-day meeting and signaled it would hike rates to fight persistent inflation. The benchmark 10-year Treasury yield climbed above the 1.8% following the outcome of the meeting. As such, the Euro-USD plunged back below the 1.1300 figure and extended losses to two-month lows, holding marginally above the 1.1200 figure on Thursday. The pair now looks oversold, but strong bearish momentum indicates that the euro could weaken further in the short term. A break below 1.1200 could push the common currency toward 2021 lows near 1.1185. Meanwhile, Asian stock markets declined across the board on Thursday as investors digested the U.S. Federal Reserve's policy decision. The Shanghai Composite in China shed 1.5%, Japan's Nikkei 225 lost over 3%, while the MSCI's index of Asia-Pacific shares outside Japan dropped 2.0%. Geopolitical concerns surrounding Russia added to the Fed-led risk aversion wave in the markets. Adding to the pressure in the region, Evergrande struggles to make coupon payments and eyes for debt restructuring. In other stocks, shares of Samsung Electronics fell 2.46% after the company reported a 53% jump in operating profit for the fourth quarter of 2021 compared to the year before, but it was down 12% from the previous quarter. That is all for today. Thank you for watching. Please click subscribe to always be in touch with the latest market news.